Last month, Groww, India's largest stockbroker by volume, announced the discontinuation of its US stocks investment service. If you're holding on to these US stocks, you are faced with a choice. Either navigate the tricky path of transferring to another broker or sell and potentially incur extra costs. So, how can you continue investing in global giants such as Microsoft, Tesla, or Walmart from the comfort of your home? Well, don't panic because today we're discussing my favorite low cost and user friendly trading alternatives to access the US market so you too can continue building your global investment portfolio without any disruption. Namaste, and welcome to another episode of Herpy Matters, a channel dedicated to empowering and inspiring you to take control of your personal finances. I am Naina Sharma, your financial mentor and host, and it's truly exciting to have you join me. Investing in US stocks from India is now easier than ever before, thanks to technology advances and seamless integration into global financial markets. As an Indian investor, you have got two choices from direct investment through overseas trading accounts to indirect routes via mutual funds, ETFs, and mobile apps. The big question then arises, what's the right choice for you? Well, as for me, over a decade, I have been using the most followed and trusted method to invest in US stocks. That is, through an overseas trading account with a domestic broker. My go to choices are ICICI Direct and Zerodha, as both have been stellar in executing trades. But here's the catch, some smaller brokers throw in trade caps and limits on foreign investments. So be sure to double check the fine print before you open any US trading account with a domestic provider. Here's a nugget of wisdom from Herpy Matters. Opt for a domestic brokers with no minimum balance requirements, a flat transaction fee, no withdrawal constraints, and swift money transfers to your bank. And if you're looking to start with a small investment in US stocks, consider 5 Paisa. Why? It offers fractional ownership. But what's a small investment? And fractional ownership? I would say anything less than 20,000 rupees is seen as a small investment. How about fractional ownership? It's like owning a slice of a high price stock, making it possible to invest in high price stocks normally reserved for high net worth individuals. Imagine owning half a share of Amazon for just rupees 6,500. Unfortunately, no prime delivery included. Let's talk internationally now. If you are like most Indian investors and not only want to invest in the US but also in other developed markets such as Europe or emerging markets in Africa and South America, it's time to consider an overseas trading account directly with a foreign broker with a presence in India. But keep in mind that under the LRS, an Indian resident is only permitted to invest up to $250,000 or around 1.9 crore rupees per year. So, you need to ensure that you are budgeting and allocating your funds wisely. But where do you start? And what are the options available to Indian investors? From personal experience, I have found Ameritrade and Interactive Brokers to be top picks, offering a robust product lineup, live market data, and superior customer service. I cannot stress enough how important and what a difference the last point makes. And unfortunately, many investors have suffered financial losses because domestic brokers are unable to maintain even the most basic service levels. And here's a little tip. So don't tell me I didn't warn you earlier. You must understand that there are liquidity and time zone differences amongst other challenges, especially for those who are reacting in real time to market changes. While continuously monitoring geopolitical events and economic indicators that impact financial markets almost immediately, the US stock market also allows for pre-market and after-hours trading, extending beyond regular trading hours. Therefore, trading during these extended periods requires caution, as liquidity can be lower with higher bid-ask spreads and increased price volatility. While Indian investors have benefited tremendously from the growth of the US, it's important that you understand subtle differences before jumping in. Though direct investment sounds thrilling, it comes with responsibilities and risk. But what if you could let the financial maestros handle it while you take a more hands off approach to wealth management? Well, that's the indirect method for you. We've extensively covered this topic in our previous videos, and most Indians are familiar with these terms. But ETFs and mutual funds are your golden ticket to investing in global giants. They not only open doors to the world's largest companies but also offer a hedge against the Indian rupee's potential depreciation. When considering US investments, you can choose between Indian based and foreign based mutual funds and ETFs. Indian based funds are normally managed by domestic asset management companies and provide exposure to US markets through American Depository Receipts or ADRS. Currently, I've invested in the ICICI Prudential US Blue Chip Equity Fund and Franklin US Opportunities Fund as part of my international portfolio allocation. Feeling overwhelmed? I suggest you start with ETFs like Triple Q, Power Shares, or Vanguard Woo that gives you a broad view of the US market. But beware of the SPY SPDR ETF. It might come with a higher expense ratio and someone's making a commission out of it. If you are unsure, I suggest starting out with one of the many ETFs that gives you a broad view of the US market. Look at the Triple Q Power Shares ETF tracking the Nasdaq 100 or the Vanguard Woo ETF tied to the S&P 500 index with a low 0.03% expense ratio. Remember to stay cautious as I have seen advisors push the SPY SPDR ETF, also S&P 500 linked, but with a higher 0.10% expense ratio. Why more commission for them? With that said, remember there are numerous avenues for Indian investors to grow portfolios with US stocks. But take your time to check the fine print of the products you are considering. Trust me, the devil is in the details, and surprises down the road aren't fun. And here's a treasure for you. Next week, I'll spill the beans on how I got a big fat refund last financial year of over 50,000 rupees by filing my taxes and my strategy for my upcoming income tax filing. We're discussing the steps, the hurdles, the smart moves, everything. It's a story loaded with insights, lessons, and a bit of a roller coaster, if I'm being honest. So, until next time, stay fabulous, stay empowered, and stay financially fierce, ladies.